Hello, accounting buddies. Welcome to Acing Accounting. I am so excited to be with you guys once again. Today, we will be doing the November 2022 grade 11 accounting paper 1, but we will be focusing generally on your concepts, statement of comprehensive income, and whatever it throws at us. Okay, so let's get to the question, which is question 2. It says concept, statement of comprehensive income. 45 marks in 35 minutes. So now we're matching the gap principles in column A with the examples in column B. Write only the letters A to D next to the question numbers 2.1.1 to 2.1.4 in the answer book. Now 2.1, it says materiality. We're reading A. A says buildings are valued at 2,500,000, but is shown as 550 in the financial statements. Okay, and then we also read interest expense should be disclosed separately in the financial statements. And then C, a debtor who owes 1,270 was written off as a bad debt as he could not be traced. And then we go to D. So insurance 2,500 is paid in advance. This amount is not reflected in the statement of comprehensive income. If you could read A, buildings are valued at 2,500,000, but they are shown as 550 in the financial statement. This sounds like your historical cost. All right, which means your historical cost 2.1.3, it's A. And then when you read B, it says interest expense should be disclosed separately in the financial statement. We are disclosing interest expense separately, right? We are being materialistic because we are recording interest separately from everything else in the financial statement. So that goes to B, materiality. And then if you could go to C, now we're reading C, it says a debtor who owes 1,270 was written off as a bad debt because he could not be traced. So we are being prudent with our debtors. We know that we can't really trace, such that we will not be able to get back our money that we are owed by the debtor. That is why we have to be conservative with our assets. We do not overstate our assets and we do not understate our liabilities. That is what the prudence gap principles say. So that is why 2.1.4 is going to be C. All right, and then the only answer that is left out now is only D. Okay, so let's read D. D says insurance 2,500 is paid in advance. This amount is not reflected in the statement of comprehensive income. This also goes with your accrual, almost wrote annual accrual concept in accounting. Okay, so if you have not learned this in grade 11, you will probably talk about it maybe in matric or when you get to varsity if you want to be an accountant. So our answers go as B, D, A, C, and then we can fill that in. It's B, D, A, C. All right, now we move on to our statement of comprehensive income for the year ended 28th of Feb 2022. So we're given Amadiba traders, and then we are supposed to complete the statement of comprehensive income using all these adjustments that we are given from information A to information B and the years. So let's begin. It says here, very first adjustment, the business used a fixed markup on cost, markup of 60% on the cost price. As we know that the cost is 100. That's how we do it. We have sales, we have a markup. Okay, markup of 60. If it's on cost, your cost will always be 100, and then your markup is 60, and then your sales is the addition of the two. Your sales are 160 All right. And then the business used a fixed markup of 60% of 60% on the cost price. This was achieved over the financial year. All right, we're checking our sales, we're checking our cost of sales. Okay, we're not given any amount, so we are supposed to get the amount from our pre-adjustment trial balance. So our sales is 1,770,400. It's 1,400, and then we check if there are any adjustments that will affect our sales. It says here on 28 February, credit sales for 9,600 were not recorded, so we're supposed to add that to our sales plus 9,600. Okay, and then we close there. Let's just ensure if there aren't any adjustments regarding our sales. Okay, this is stock taking, bad debts. Okay, I think we're done with our sales now. So we have got our sales amount. Let's check our cost of sales. We're not given, right? Okay, so we calculate our total sales. It's 1,770,400. It's 9,600. Okay, this looks a bit like a 1. So that's 770, and I'm getting 1,780,000. Okay, so moving on, how we get our cost of sales. Remember, our cost of sales are 100, what we want over what we know, multiplied by the given amount. So that's what was achieved. And then you get to calculate. That's 100 and 60. Okay, over 160 multiplied by 1,780,000, and your cost of sales are 1,112,500. Don't forget your brackets there. And then a gross profit, you just simply subtract your cost of sales from your sales. Okay, I'm getting 667,500. All right. No. Other income, we go to check. We continue with our adjustments so that we can see what we need to actually adjust. So stock taking on 28th of Feb reflected trading stock on hand 287,700. Let's check what we have on our pre-adjustment trial balance. So we are looking for trading stock. We have 284. Okay, so we have more stock than we had on our records. So this means we have a trading stock surplus. All right. Okay, it's 287,700. Okay, that's gonna be our first one. Trading stock surplus. Let's see how much is our trading stock surplus. It's 287,700. We are going to subtract 284,000. And then when you calculate that, it gives you okay, but before we do that, let's just ensure if there isn't any adjustment that will affect our trading stock. All right. Okay, so we are moving to 4B just before we close. Okay, we have adjustment. Okay, further amount. This is a bad debt. Okay, we'll look at that later. Okay, so we have adjust the provision for bad debts to 5%. The telephone account, no, it doesn't affect our stock. The loan statement received, rent has been, okay, this is rent. Now, remember that we did not record these sales. Remember? So these sales will definitely affect our trading stock. So it's the sales, it's 9,600. The cost of sales are to be 100. over 160. Okay, let's see how much that is. Over 160, and that gives us 6,000. Because we were not told that these the credit sales were not recorded anyway, right? So this means it was also not recorded when we were taking into account our trading stock. So that is why this transaction affects our trading stock account. So that we're gonna record your 6,000 and then we subtract it here. Okay, let me just add a bit of space. And that will give us okay, it's 287,700 minus 284 minus 6,000, getting 9,700. Okay, let's bracket this two. Alright, so we have a trading stock deficit. Oh, trading stock surplus, sorry about that. And then we are moving on to our next adjustment, which is a further amount for bad debts. 1,400 must be written off. Okay, so we are moving to your bad debt. This bad debt. It says 1,400 must further be written off, which means there was another amount that was written off, which is 7,790. Okay, so make sure that you always refer to your pre-adjustment child balance when you are making adjustments and see if you were given any amounts before. So it's 9190. 9190. Moving to the next adjustment. Adjust the provision for bad debts to 5% of outstanding debtors. Remember that we have just written off one. And then we also had a transaction that affected our debtors. Okay, so we are supposed to say our debtors control increased by from 88,000 plus the 9,600, and then we wrote off 1,400, and let's see how much we've left. So that's 88 minus 9,600. Oh, it's plus 9,600 minus 1,400, just 96,200. Let's see, 5% of that is times 5%. That's 4,810. All right, but our provision for bad debts in the previous year was 5,950, so it has decreased. That means it's an income of 5,950 minus 4,810, and we get an income of 1,140. Okay, so it's a provision for bad debts. Please allow me to abbreviate bad debts adjustment, but never abbreviate when you are writing your exam or your test. You will get a nice 0. Okay, so it's 1,140. Let me just make sure if that amount is correct. Yes, it's 1,140. Okay, so we have adjusted for our bad debts. And then number 5, it says the telephone account for February 2022, it was 1,150. It's not paid yet. So how much have we paid during the year? 10,500. That's the amount, 10,500, but we haven't paid 1,150. Okay, So that's a telephone. We have paid, what was the amount again? 10,500. 500 plus 1150. Is that correct? Let's check. Yes, 1150. And then when we add these two amounts, they will just give us 11,160 using that mental math. And that mental math is not really mental mathing. So that's going to be 650. All right. And then now we move on to the next adjustment, which talks about insurance. So insurance was paid for 1 month in advance. The insurance premium increased by 10% per annum from 1 Jan 2022. The policy is in place for the entire financial year. So this is the type of an adjustment that you would like you to draw your timeline. So our financial year ends on the 28th of Feb 2022. Remember, which means it started on the 21st in 2021 on the 1st of March, and then this is Feb 2022. Okay, so we have April, May, June, July, August, September, October, November, December, Jan. Okay. Okay, so it says 10% here, but remember that we had paid 1 month in advance. So this is March, the next year. So 10% here. Let's get that. 10% here, 10%, 10%. So all these other months we had the normal rate, which we will call to be X. And then this other rate, we will say it is X plus X times 10. Because this is the normal rate. Let's say let X be equal to the normal rate, the normal insurance premium. So, and then after the increment, we had the normal rate plus the increment, which is 10% of X, which is 0.1 of X. Thus, that can also be expressed as 0.1 times X. That is why I said here X plus 10%. All right. So now what we are going to do is do the calculation. So I have insurance, it's 107,730. 107,730 is equal to how many times did we pay? But there wasn't any increment. We paid for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months. Is it 10? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, it says it's 10 X. Let's see if that will be correct. So if it is not correct, we will then do the recalculation. 10, and then we have 3 months. Okay, 3 months of X plus X times 0.1, and that gives us 10X plus 3X plus 0.3x, because if you could take 0.1 times 3, and then you this is 0.1x times 3, which gives you 0.3x. So that's how I got the calculation. Okay, and then if you add all of this, it will give you 13.3x, and then you divide by 13.3 both sides, and then you get your normal rate to be 107. Okay, 107,730 divided by 13.3, which is 1,800. My handwriting is so horrible. So it's 1,800. But this is without the increment. Now, in March, there was an increment of 10%. That is why we need it to be 110. X is equal to 100, remember? And the 10% increment, right? So that is why it becomes 110. So 110, and this is our X, times 1,800 would give us times, okay, let's see, answer times 110%, which is 8,910. Okay, I think that is correct. So our insurance goes from 17,730 minus 8,910, which will give us 98,820. All right, and then now we will look at the next adjustment, which is rent income. So rent income has been received for the period 1 March 2021 to 31 December 2021. So note that the rent was decreased, okay, by 200 per month as from 1 October 2021. Okay, you might just want to throw a new timeline. So let's try drawing a new timeline here and just clear out all of this at once so that we can have some space for working out this one. Okay, let's just use pink. So the rent income has been received for the period 1 March. That's the beginning of our year. So that's March, April, May, June, July, August, September, October, November, December, Jan, and then we've got February. Okay, so from there we received the loan from 1 March. That's it. Here there was a decrease of 200. Right, we received it until the 31st of December. This is the end, so that's how it goes. Boom, boom. Okay, so what's happening here? We received X amount before they decrease it by 200, and then after we receive X minus 200 because they have decreased 200 from the principal amount that we have been paying before these months. So now how do we get that? All right. So we are going to say, what's this amount that we given for rent income? At 69,700. So 69,700 is equal to how many months did we pay X? 1, 2, 3, 4, 5, 6, 7. 7x plus how many months did we pay minus X minus 200? It's 1, 2, 3. Okay, let's just rectify. Assure from our information that we're doing the correct thing. So it's not that the rent was decreased by 200 per month as from 1 October 2021. Okay, so it's 1, 2, 3. 3 into X minus 200. Okay, so it's 69,700 into 7x plus 3x minus 600. It's supposed to be 600. 2 times 3. Okay, so let's try calculating that. 6,700 being equal to 10x minus 600, so 700 plus 600, that's 300 into 10x by 10. X is equal to 70. Okay. Divided by 10, which is 730. So our X is 7030, right? But we want X minus 200, which is 730 minus 200, because remember now, coming to this, we haven't received any rent income for Jan and Feb. That is why we need to include this in our income statement, because it is accrued income. Okay, so 730 minus 7200, that's 6830, and we are supposed to receive this for 2 months times 2 times 2, which is 13,660. All right, so we will decrease our rent, we will increase our rent. We have rent income, that's 13,660 plus what we were given there, which is 69,700, and that shall give us 83,360. Okay, now we are done with rent. We move on to the next adjustment, and it says the loan statements are received reflected a closing balance of 312,000. Interest capitalized is not yet recorded. So we go to our information that we have. We have 294,500, but the loan statement shows 312,000. So the difference between these two amounts is that we as the business, we do not take into account interest, but the bank takes into account your interest. So I'm just going to do this. Interest bank, no. Interest business, no. Interest bank, yes. See, so from there we're then able to determine the difference between the two amounts, and the difference between the two amounts is your interest. Okay, so this simply means that we are calculating the difference between 312,000. So here it's operating profit, and then you have your interest income. That's how your income statement should be, interest income, and then you have profit before interest expense, interest expense, and then that's where you have your interest expense. So it's 312 minus wait, is it 312? Yes, 312 minus what we have on our records, 294,500. Let's see if they said anything about repayment of the loan. I am not seeing any of that, so I'm just going to continue with the calculation. 312 minus 294,500, which is 17,500. Okay, I'm done with interest, and then we move on to the next adjustment, which is the 10th one. So the last adjustment says the net profit for the year after all adjustments were taken into account amounted to 346,840. So we are given there And then we are supposed to work our way backwards to finding our interest income, our operating profit, but we are still not done. Then we can move to, but before that, we can calculate our profit before interest expense. All right. So we are supposed to just add these two amounts, and then let's see what we get. 346 840 plus 17,500, and that's 364 340. All right, and then we can continue with the rest of what we haven't taken into account, because you can literally just see that there are some adjustments that we have to take into account, like your depreciation. We haven't recorded your depreciation, so let's just take that as it is, because there isn't any adjustment. 61,500. Here I have depreciation of 61,500, and then you move to check if there are any that are left out. Your salaries and wages, are we given? Yes. And then advertising is also given, and I think we are done with our operating expenses, and then we can add and get a total. So this is where you are supposed to be careful with your calculations and make sure that you get your answers correct. Plus 9190 plus 11650 plus 98820 plus 61,500, and that will give us 419,960. Okay, and then let's ensure that we are done with our other income. Let's see, what else do we have as income? Discount received, we never accounted for that. How much is our discount received? 4,600. Okay, let's see if that is correct. Okay, discount received of 4,600, and then you add everything here and see what you get. 4,600 plus 83 360 plus 1140 plus 9,700, and that gives you 98,800. And then you add these two amounts to get your gross income of 667,500 plus 98,800, which is 766,300. Okay, and then you take this, you subtract this, and then you can get your operating profit. 300 minus 419,960, which is 346 340. And then I guess your interest income is supposed to be your balancing figure. So when you get your profit before interest expense, you can just subtract this to get your interest income. All right, so we are going to say 364 minus 346 340, and that gives us 18,000. Okay, so now it says, it looks like we are done with our statement of comprehensive income, and then we move on to the last question, which asks us to provide two possible reasons why rent income decreased. Okay, so if you could look at this paper. It is it was it is really general, and it was in 2021 and 2022. So these were the times of COVID, and you might want to think outside the box here, because um people lost their jobs. And I mean, people, let's say maybe the tenant couldn't afford to pay a higher rent, or maybe they got a better offer, so they then decided to tell us, no, I'm gonna be moving. And then we said, no, we can maybe negotiate, or we can decrease the price. So those are the possible answers that you might want to use here. So I would say, let's say maybe, what would you say? So rental space was not in demand, so we decided to decrease the price. Okay, it was not in demand. So as I said, I was talking about your lockdown. Let's just say prices decreased because of lockdown. So unemployment. Okay, so these type of questions just need you to think outside the box. No answer is really incorrect, as long as your answer is making sense. Okay, so also I was talking about, maybe the tenant got a cheaper offer, or a lower rental space, a lower rental space, a lower priced rental space. And then we maybe decided to negotiate a price lower than what they got on the other space. So that's just about it for today, and that is your income statement. Thank you for joining me. I really hope that it really worked for you as much as it is exam time. Soon you'll be doing your trial examinations, which is your third term. Unfortunately, trial exams are only in matric. And I just wish you all the best. Don't forget to subscribe, like, and drop a comment down below on anything regarding accounting that you might need help with. Share with your friends, share with your schoolmates. And from me, that's all today, and I will see you next time. Thank you for watching.